for an earnings call now, and we're going to do that with Praj Industries. The stock is trading at the moment with a negative bias. If you were to just see the earnings report card also that has come in, the bottom line is, has gone up by about 32% year on year to come in at 37 crore rupees. The EBITDA is at 51 crores as against about 40 crores year on year, and the margins have come in at 8.7% as against 11% year on year. Joining us now is Shishir Joshipura from Praj Industries, the MD and CEO. Thank you so much, Mr. Joshipura, to be live here on the market. My first question, and to do with the earnings, with the stock also trading with a negative bias since the fine print has come out for the third quarter. The margins have obviously been compressed, and that's a theme that we have seen across the earnings calendar for the quarter under review and the previous quarter, whether we see your margins as well as EBITDA with inflation on the rise. Anything that you want to tell your shareholders, the analyst community at large, when it comes to margins, and what your plan can be to expand them once again?
Morning. Yes, I think we have maintained right through the year that the runaway rise in the commodity prices are going to have their play on the margin side. And this was the quarter where obviously the maximum impact was felt, because it was for the product execution cycle like ours. We are looking at between 8 to 12 months kind of a time cycle. So this is where it is actually playing out. So very clearly the whole runaway inflation on the steel prices, the commodity prices has really played out. That's number one. Number two, the world is recovering and still recovering from the pandemic, and it had impacted the international business environment much more. India recovered much faster at the back of some very favorable policies that we see in the environment. So very clearly, the international side of the business also is a little slow in the uptake. But what's very encouraging for us is the fact that we have started to see the return of international business back to table. We have actually seen a significant growth in our order book on the international side of business in this quarter. In fact, we have now surpassed our entire last year's order book and sales numbers within the 9-month period itself. So that's a very positive sign of customers returning back, especially the international projects as well. Also, we now see some kind of moderation happening in the commodity prices, although it is still not come down to a level. However, at least it has stopped growing the way it was running away and growing over the last 9 months or so. So those are two very, very positive aspects on the external environment front. Internally, of course, we have to keep doing what we are doing. So use technology as a lever to drive it forward. We just launched an absolutely innovative world-first biosyrup technology last quarter, which allows the sugar companies to actually run their plant for the full year at the back of their feedstock. So I think that's going, and that is creating so much of traction in the both domestic and international market. And we are very hopeful that technology will also be a lever that will help us to start returning back to quote-unquote normalcy.
Is your order book going through this whole challenge of legacy order book, which was a lower margin order book, new orders which are coming at a more realistic market level, and the turning point would be when the legacy order book moves into new order book? Are you going through this transition, and will that continue?
Yes, there is some element of the legacy order book for the fact that what orders we got, and they have clearly seen this commodity price hike cycle. So no question about that. The new orders do come in at the new cost levels. And if the inflation is, or the runaway rise in the prices at moderate level, we expect that to moderate down as we move forward. No question about it. We do have a strong order book that we have built, and that to me is the most encouraging part, that we have built a very, very strong order book that allows us to actually go and start leveraging some of our volume-based economics, etc., which will allow us to start managing this cost inflation in a much better way.
Understand your order book. How much is 2G, how much is 1G, how much is international? That's one way of looking at your order book. Other way is how much is old business and how much is new business. The old business is ethanol, new business could be alternative fuels.
So let's put it like this. So I would not recall ethanol as old business, because this is still a very, very positive story in India and is still continuing to develop in that direction. So if you look at our quarter's order book, it's close to 1,000 crores, almost 950 crore plus order book that we have reported. So a significant portion of that is coming from ethanol at the back of the EBP 20 program and the capacity creation that is happening at the back of it. So we expect that story to continue. Our understanding is that we will still see a lot more capacity to be built. As you probably know, India just declared that we had finished the ethanol year at about 8.1% of ethanol blending. The target is to go to 20%. So there is still a long journey to be undertaken. And so ethanol story will play out. The alternative fuels that you talk about are on the horizon. That is something that will happen and play out in the future. As of today, the work is around ethanol. Our engineering businesses especially are also beginning to look positively upwards now. And that is something that is of interest to us, because one of our business arms is also going to be very focused on exporting, so which is obviously a focus area for us.
If commodity prices they come down, which is what you alluded to, there is a big if, will that automatically start boosting your margins? What I'm trying to understand from you is that a lot of capital good companies, when we speak to, they indicate to us that, look, there is a little bit of adjustment issue, but commodity prices are a complete pass-through. So when they go higher, we don't lose a lot of money, but when they go lower, it's not that we make a lot of money.
Well, what you have to understand is that what is the nature of the contract and the cycle time of the execution of the contract. So let us say I start a contract at 100 rupees today, and it's got a built-in cost of say 60 rupees. Now, if I take 9 months, and over the 9 months as I start, and let us say over the next 3 months, if I have to start finishing the engineering and buy material, within 3 months, the inflation is 2, 3, 4% is one dimension, but if it's 20, 30%, it's completely different dimension. So that starts to eat away at my margins. Now, 3, 4, 5% kind of a change, one can manage. That is not a problem. But if the change is of the order of 20, 30%, which is what we've seen through last 3 quarters on a consecutive basis, then it becomes difficult, because then the contracts are not passed through. In that, however, when I go for a new customer, for a new bid, I would have adjusted my price to today's level. But from today, if it again starts to rise 30% within a short period of time, then that becomes difficult. Pricing being at a higher level is not so much a problem, as their continuous rise over a short period of time becomes a problem. So if I say the curve flattens for the increase, that's better for us, and it will start to reflect somewhere in our margins as well.
Good morning, Mr. Joshipura, and wanted to also talk a little bit about how the company is going to take advantage of the shifted global focus on the decarbonization theme.
Well, I'm glad that you asked the question. Yes, decarbonization is an extremely important event that is going to unfold as we move forward through time. All our solutions are actually focused on reducing the carbon footprint, the second generation ethanol technology, CBG, even the first generation ethanol technology, things that we do, the clean tech and green tech companies whom we help put together their technology together through our skid solutions and modularization. So lots of areas where we work are actually addressing reducing of carbon footprint. We expect that to become a very big move as we move forward and expand the whole biofuels program. Today, as you can see, we are actually addressing only the surface transport. As we move forward, we will look at addressing air transport, maritime transport. So I think we are going to see a very, very different era as we move forward through the timelines. And it augurs very, very well. We are very focused. We have sustainable aviation fuel, which is for the aircraft industry. And we all know that when the CORSIA clause comes into being from 2027, airlines will have no choice but to start shifting over to sustainable aviation fuel to manage their carbon footprint. So very clearly, reduction of carbon footprint is going to be at the forefront of all the offerings that we have, and we are very excited about the future in terms of what's going to unfold.
Okay, that sounds very promising. And what about renewable chemical materials? How will that be the next growth driver for the company?
Correct. So RCM is obviously there are different what I would call as stages through which the development cycle is going through right now. But if you look at a broader footprint globally, what are we saying? We are saying we need to move to a more sustainable lifestyle that does not compromise the future of our incoming generations. We are not asking for compromising in the lifestyles. All we are asking for is shift. so that we are not in a position, as humanity, we don't end up doing harm to the future generations' right to use the resources that we have. So from that perspective, if you look at it, then renewable chemical and materials very clearly will have a big play out there. The first big starter is going to be the areas of bioplastics. We have talked about them, biodegradable plastics versus bioplastics, and the normal plastics that we use today. And I think it's going to play out, although it is slightly longer term compared to say in aviation fuel starting to play out in the timeline zone. But definitely we will see very constructive development. And the most important news there is that ethanol is going to be a very basic building block for all these future renewable chemicals and materials that come into being. It's like a brick for building a house, So I think our understanding of ethanol, its market, its dynamics is going to play a very important role in helping us build what I would call as a much better future house.
You're, of course, taking a leap of faith and a lead also when it comes to ethanol, and the government is also making the right noises. But Mr. Joshipura, if I were to see, you're also betting on other technologies, right? So besides ethanol, you've got CBG, you're doing something with bitumen, bioplastics, etc. For the benefit of our viewers, can you tell us what the top two priorities would be if we were to, ask you and force you to tell us what the top two are for commercialization? Because it'll give us an indication of which way the company is headed.
Yes, very clearly, as I think what you said, the decarbonization of the economy is going to be a very, very big driver as we move forward. Expansion of the biofuel basket to move away from only surface-based transportation to also include air to start with, and then over a period of time to maritime. And then also in the process, use our technology and knowledge that we have to create what I would call as several value-added byproduct streams, which actually allow us to start looking at the whole bioeconomy like a biorefinery, right? Today we have a normal oil refinery, and we have a whole host of products that starts to flow out from both upstream and downstream. And similarly, I think we'll have to see a more or less a similar play out happening on the biofuel side as well, where a biorefinery becomes the order of the day, where not only one cutoff, so ethanol and the CBG, aviation fuels, maritime fuels, biobitumen, bioplastics, you name it, all of this comes out from the same complex or starting from the same feedstock. So that is our vision for the future, and we are very, very excited about it.
Okay, so that's Praj Industries for you, ladies and gentlemen. It did come out with its third quarter numbers where you had seen profit go up by more than 24%. Margins had compressed in line with what the street had also been expecting. And now you have a future trajectory also where the company is headed. Thank you so much for joining us live today on The Market. We're going to take a short commercial break, but stay tuned. Coming up on the other side, Escorts, after its third quarter report card, will be touching base with the top management.